Hello, this is Leah with your weekly grain market update for the week of March 6th. Corn futures were up 7 cents for the week. December futures rose to the highest level since May of 2024. With oil and fertilizer shipments restricted from the Middle East, traders sense that new crop corn planting could be in jeopardy, with acres trimmed as fertilizer, diesel, and natural gas prices rise sharply. U.S. corn export demand continues to outperform expectations with last week's sales of nearly 80 million bushels, putting commitments 31% higher than a year ago. In the world news, just over 7% of Argentina's record corn crop has been harvested. In Brazil, the second and larger corn crop is close to 75% planted. Corn is surely also getting a boost from the sharp rise in crude oil, which has surged more than $35 per barrel as the strait has been closed. Next week's WASDE report has taken a back seat in importance as geopolitical concerns dominate ag markets. Soybean futures were up 21 cents for the week. Soybean futures surged, supported by strong rallies in soy products and fears of inflationary pressures. Exports are the lowest in 7 years and down 300 million bushels from last year. Traders are holding out hopes for a meeting between the U.S. and China rescheduled for next week and a Trump visit to China March 31st. No one knows if the ongoing and expanding conflict will postpone these meetings. China has shown little interest in buying additional old crop U.S. beans and instead is rumored to have picked up as many as 35 to 40 cargoes of Brazilian beans this week through June. Next week's report, traders are expecting only a modest decline in soy ending stocks to 343 million bushels, while Brazil's soy crop may see a small downward adjustment to 179 million metric tons, which is still a record large. Positive is that 26% of the Argentine soy crop is rated poor to very poor. Wheat futures are up 33 cents for the week. Wheat markets led the way higher with both Chicago and Kansas City spot month futures hitting the highest level since June. Despite what are still regarded bearish world fundamentals and supplies on wheat, the wheat markets have reacted with the most energy following the Iran conflict. Inflationary concerns with the sharp rise in the U.S. dollar along with the related rise freight costs have supported wheat. Just some things to look at and think about. Reach out to your local grain merchandiser with any thoughts or questions. Hope you had a fun and safe weekend. Thank you.